Markets are set to explode, specifically crypto markets. Altcoin season is underway. The Federal Reserve cut interest rates. It is the wick that is been lit so that the cannonball can explode. But there's going to be a downfall. This is going to be a packed macro update. We're going to talk about the Federal Reserve interest rate cut. We're going to talk about what it means. We're going to talk about how long they are saying that they're going to cut rates. And we're going to talk about the 20-year cycle and how Bitcoin fits into it, and when I plan on taking less exposure to the market. This is going to be one you definitely want to pay attention to. All right, so before we get started, I do have to say none of this is financial advice. Let's jump straight into the video. All right, so here we are. Jerome Powell, the Fed chair, has been under significant pressure from just the markets, his board of directors, as they disagree with him on a rate cut decision, a couple months ago. And that hadn't happened since 1993, first time in 30 years, before that in the 50s. Donald Trump's been calling him an idiot, saying he's incompetent, saying he's trying to destroy the economy, He finally, I don't know if he gave in or if he just actually genuinely thought it was the right decision, but we did get a 25 basis point interest rate cut, which is 0.25%. So that brings the federal funds rate to the lowest this has been in almost 3 years, right? And they also provided signals of what they're going to do in the future. So they're anticipating 2 more rate cuts this year and another one in 2026. And guys, keep in mind, it's September. Another one in 2026 and one more in 2027, which would take the federal funds rate down to around 3%, which is the median forecast of what they see as neutral. Now it talks about how the major stock indexes reacted to it. I'm going to pull up the charts and we're going to go over that per usual. But the reason being is because, well, at least what people think is that Jerome Powell characterized the rate move as risk management, a risk management cut. And given the fact that they're only saying that they're going to do one cut in the following each 2 years, so one cut next year and one cut the following, the markets were kind of like, what does that mean? Like, why would they only cut it, twice? Now, I don't know exactly what he means by a risk management cut, but all I can do is do my best job to interpret what he means. What I think he meant by that is that he's basically trying to get ahead of a recession. That's my best guess. Because if you think about risk management in a portfolio, like risk management is having some of your portfolio in cash and having some of your portfolio hedged against downside risk. It doesn't mean that you necessarily expect it to happen, because if you expect it to happen, you're going to go more heavy. But just to have risk management so that if a downside occurs, you're still protected. And I think that's what he's doing. If there's some kind of catastrophe that happens in the economy or black swan event, interest rates are lower, and people can borrow money to basically help themselves. And not just people, but mainly institutions as well. So if you look at this, right, this shows the S&P 500's performance after there's a rate cut. Pivot and a rate cut is the same thing. So you can see when they dropped, these are the interest rates here. When they dropped the rates here, we saw a 36% drop in the S&P. When they dropped it here, they saw a 48% drop, 27% drop, 51% drop, 58% drop. Right now, it was followed by a eventual rally, but there was a drop. 2019 was a drop. Now, all of these cuts were because there was a catastrophe already happening. Like 2000, we had the dot-com boom. The Fed pivoted in 2007 when the market topped. And, we were going through the 2008 financial crisis. That was a buildup, right? They pivoted in 2019 because of the pandemic. And we're going to go through some of these events as well. Just stay in the video. I'm going to talk about the 20-year cycle. This cut wasn't because there was some black swan event. It was because, like I said, risk management. He wanted to prevent something from happening instead of something had already happened, and he wanted to cut to kind of smooth things off a bit, make it less painful. The economy is looking pretty good, relatively speaking. So I think instead of it being a pivot and then we see a market downturn, I think after this pivot, we're going to see a huge uptick, not just crypto, but stocks as well. And then I think in 2026, we're going to see things start to drop, and I'll explain why towards the end of the video again. Definitely stick around. All right, guys, if we look at the crypto fear and greed index, guys, we've been calling for rate cuts for all year pretty much. And even with the rate cut, we're still at neutral. Like I've been saying for weeks, this tells me that we have a lot more room to go. Altcoin season I'm calling it right now is confirmed. Because you got to think, the Fed said that they're going to continue to lower rates a few times. This is what they do. When they lower rates or when they raise rates, it's typically in a trend. Like they don't lower, then raise, right? They'll either lower and continue to lower or lower, pause for a bit, and then lower again. Same with when they do rate hikes. They'll hike, pause, hike again, because you got to give the economy time to adjust to this, right? Because when you raise and lower interest rates, you have to keep in mind there's so much borrowed money in the system. So when interest rates are risen, whether if it's a mortgage or a car payment or whatever, people's payments for all these things change, right? And when people's payments change and they know they're gonna have to cough up more money, they start to lay off people so as to avoid paying more, right? To cut costs. So they start to deleverage, which is the act of selling one's assets to cover debt. So it's a lot of things that happen when rates are lowered and dropped. Like companies will either increase their risk when rates are lower or decrease their risk when rates are risen. So the Federal Reserve, they try to give people time to kind of let things marinate so they can, not have to make super rash decisions. So as this gets into the more greed territory, that's when we're going to be taking profits. But right now, it's definitely time to start loading up, starting to get exposure, et cetera, et cetera. If we look at the altcoin season index, we haven't even gotten to the thick of it, right? I'm going to go over the Bitcoin dominance chart in a bit, but let's look at the ETF data. In the past couple of days, we've had some outflows, but within the past week, there's been mostly inflows. The orange line is the Bitcoin ETF, so you can see 741 million in inflows, 164 million in ETH. Another day of over 500 million for Bitcoin, and then over 100 million in ETH. Another day of over 600 million in Bitcoin, 300 million in ETH. Like I said, this trends up and down. This is the 30-day. If we look at the year, you can see that it's been more up days than down days. And as we continue to go into altcoin season, I expect this to increase a little bit for Bitcoin, but start to drop because Bitcoin dominance has to drop. I do believe that we're still going to see 130 to 150K Bitcoin. I don't think we're going to go anywhere near 200 this cycle. And I think we'll see a 10 to 15K ETH. So I think ETH, like these blue lines are ETH. I think the ETH ETF data is going to continue to outperform Bitcoin ETF buy-in like it is right now. And this also is shown in the ETH to BTC ratio, and that Ethereum is starting to outpace or outperform Bitcoin, right? So I do expect that to continue. All right, let's go over to our macro indicators in our chart. So you got the central bank balance sheet still continuing to drop, which is a good sign. All right, we got our cross looking strong. M2 money supply, we're still printing money, and we're going to talk about stable coins here in a bit. Just reiterate on it. We got gold at an all-time high, even though inflation is dropping, right? Economy's weird right now. Normally in situations like this, gold wouldn't be doing so well because gold is looked at as like a safe haven to protect against inflation. Maybe people are scared that Donald Trump is going to print money and, try to make the economy perform well. I don't know. If we look at the S&P 500, you can see that we're near all-time high levels. It didn't really react too much to the rate cut decision. And I was saying last week, I do think it was already priced in, right? The Dow Jones did actually print a new high off the news. The NASDAQ near all-time high levels. And we have Apple, which is the largest company on the S&P. Actually, I think NVIDIA is starting to trend back upward since its correction back in April. And we're getting a cross on our 62 and our 200-day EMA. Anytime the orange line is on top of the blue, we're in bullish conditions. Now we got that orange line creeping back on up. If we look at Bitcoin, still consolidating near previous all-time highs, right? Like I say, the longer the base, the higher the chase. We're back on top of our 62. In the short term, we are trending downward, right? You can see I've already talked about Bitcoin, so I'm not going to dive too deep into that again. Ethereum, still consolidating. I talked about Ethereum too. I'm expecting us to see a 10 to 15K ETH, but it's not going to happen overnight. I think we're going to consolidate here for a little bit. I think this month, next month, we'll start to see huge moves upward now that we have a rate cut and are expecting more. And since we're, going into Q4, which are historically not just cryptos, but assets in general's best performing months. We look at the entire crypto market cap. We're near all-time high levels. Obviously, I expect that to continue. And if we look at Bitcoin dominance, guys, I told you that in order for us to see a major altcoin season, we need to see Bitcoin drop, right? I'm just going to say this so I'm blue in the face just in case it's some new people watching the channel who hasn't seen it for the first time, these red lines are the halving, right? This was the last halving, and Bitcoin dominance increased because it went up, but then we saw Bitcoin dominance drop, and this was altcoin season because the liquidity exited Bitcoin and went into altcoins as people were speculating. Same thing happened back here. Zoom up here a little bit and let the chart load up. We saw this, boom, this was altcoin season, and now we finally have a drop. It's the biggest drop we've had since the last altcoin season, right? We have a cross here on the daily. If we look at it on the weekly, we're finally below our 62. We haven't got a cross quite yet. Like you saw, we got the cross here. This was like the start of it. And then we saw, boom, that was altcoin season. So we still have a little ways to go, but we're definitely getting there. And even if we look on the month, all right, you still saw a cross. We're not quite there yet. So you still have some time to research, make some money, invest, do what you got to do. But this is the institutional altcoin season, in my opinion. We have the Genius Act that passed and the Clarity Act probably about to pass. It's going to give institutions clear guidelines on how they can participate in this market without having to worry about being sued by a regulator, right? You think about pension funds. I've been learning a lot about institutional investors, and pension funds is one I've been diving into deeply. Pension funds is the slowest moving money in the world. Their two biggest concerns as a pension fund manager. The first one is to not get fired, and the second one is to not lose your regulator. Those are the two things that's on top of mind from a pension manager. So when that's your motivation, you're going to make fear-based decisions. And a fear-based decision is the opposite of a greed-based decision, meaning you want to do just enough so that you don't get fired. No one's ever got fired from buying a U.S. Treasury, right? Treasury bond. No one's ever got fired from buying gold. You don't get fired for buying established things, right? They're getting paid good money. They don't want to lose their job. So they don't care about taking risk as much. So the more crypto is looked at as legal and not risky, which is starting to be, we'll see pension managers start to get into this asset class and other institutional investors. But it's not going to happen overnight, because in addition to that, they have to get permission from their board. There's a lot of checks and balances and bureaucracy that has to happen, and sign-offs that has to be made. And as a result of this, it's been institutional investors that had missed the last rally because of it, because it took them so long. And then by the time they got the approval, they had already missed the boat. So a lot of them have some bad taste in their mouth. And this is good because all of these people have to get exposure over the next few decades, right? Think about how long it took Warren Buffett to buy Apple. He didn't start buying Apple until it was like either $1 trillion market cap or almost there, right? So we still have a ways to go, but altcoin season is right around the corner. So now I want to talk about the 20-year cycle, right? Just like seasons, I think everything in the world and the universe is cyclical, right? We have winter, spring, summer, fall. And if you look at, when you're farming, there's a time for planting, there's a time for harvest. Like, everything's cyclical, and I think markets are no different. And data has proved that. And I'm going to show you guys where I think we're coming up on the 20-year cycle, and why I think 2026 to 2029-ish is going to be a huge correction for stocks and crypto. Let's take a look. All right, guys. So this is my 20-year cycle chart, right? You have a 70-year cycle here, then you have 2 to 4 years, then you have another period where things explode and then the markets drop and we reset, right? So let's go through these one by one. So in the 50s, we had a run up 7 to 10 years, and then we had consolidation period along with major drops, right, in the 60s and throughout all of these periods. So in the 60s, the black swan event was the Cuban Missile Crisis. You had high interest rates, high inflation, and people were expecting a recession. But, I do believe that there are people that control these things. It allows them to sell their bags for cheap. Despite people expecting a recession, we had a huge run up to, the 70s, which is when Nixon took us off the gold standard. The dollar became a floating currency. It was a very prosperous time, and then there was a huge drop. And go and look on your S&P 500 chart to follow me to verify this. So then we get back to 1975, right? We had a run up of 7 to 10 years. Then we get to the 80s, and the black swan event then was the Gulf War. another period of high interest rates, high inflation. Everyone was expecting a recession, but the opposite happened after 2 to 4 years, and then there was a run up to the late 80s, early 90s. After that, another huge correction cycle. The market reset itself. 1993, the year I was born. We had a run up for 7 to 10 years. The Black Swan event was the 9/11 crisis, right? The Twin Towers. And it was also the bursting of the dot-com bubble, right? Things burst, high interest rates, high inflation, expecting a recession again. And then we had the run up to 2007. And then after the 2008 financial crisis, had a huge drop, right? Get back to 2011, had a huge run up again. Then we go back up to 2020. We all know what happened then. You guys were there, the global pandemic. And now here we are in 2025, coming onto that cycle again, right? 2027 will mark another 20 years from that. These are all around 20 years apart, as you can see. So you're probably thinking, well, what's going to be the trigger for things to drop this time? It's usually job losses, right? In 2008, there was a lot of layoffs. A lot of firms went under because it was forced selling, right? I talk about that one more because I was there, and I've studied it. I was there, but I wasn't aware of what was going on. I was in high school worrying about basketball. I didn't care about finance back then. But I remember my dad being laid off, and I was just seeing him all the time, and it was weird because my dad's a workhorse, and he was just home all the time. I'm just like, it was just kind of weird. I didn't understand what was going on. So this time around, I do think it's going to be another job loss situation. What do I think is going to cause the job losses? Artificial intelligence. It's pretty obvious, right? You already see in companies like Meta doing massive layoffs. I live here in San Francisco. I talk to people all the time. They're saying it's harder to get jobs because of artificial intelligence. Now, there is what is creative destruction. That doesn't mean, there won't be opportunities. Like the people who know how to use AI, it's going to be a high demand for those people because it is a tool at the end of the day. But 2026, I think after altcoin season has a blow off top, right? Definitely going to start taking profits around Q1, start going more into stables, more heavier on yield farming, right? Earning high yields when people are pulling money out of DeFi, just stacking my Ethereum bag, stacking my Bitcoin bag, other blue chip altcoins that, I'm bullish on long term. And then, like I said, pension funds and these slow institutional investors, they are slow to move on. The next 7 to 10 years, guys, you want to think in 20-year cycles. Accumulate, right? And then in around 2055, when I'm 50 years old, oh my God, that's crazy. 20 years from now, you'll think back on this video, hopefully, and either be glad that you listened or wish that you had. So guys, that's all I got for y'all. It is time for altcoin season, and I'm ready. I hope you're ready too. Been waiting for this moment since the last cycle. A lot more prepared this time. Hopefully you are too. But yeah, that's it, guys. If you got value, like, comment, subscribe, share with a friend. If you want to learn how to make money in DeFi, click the link in the description. Join our free community, book a free strategy call. You'll talk to me and see if our program is a good fit. And also, we do 3 virtual webinars event on unlocking wealth secrets in DeFi. If you just click the webinar jam link, you can RSVP for a time that's good for you. The same link works every week. We're just doing these, like I said, 3 times a week. So like, comment, subscribe, share with a friend. But other than that, thank you so much. I love every single one of you who tuned in. And I'll see you guys next week for another macro update. Take care and trade safe.